Welcome to News Lingo. The U.S. stock market experienced a significant downturn on Monday as investor anxiety over the trade war's economic impact continued to grow. Concerns about rising costs and potential economic instability drove a sharp sell-off, leading to notable losses across major stock indices. The S&P 500, which tracks the largest publicly traded companies in the United States, dropped by approximately 2% during early trading. Meanwhile, the Dow Jones Industrial Average saw a decline of 0.9%, and the Nasdaq Composite, which is heavily weighted with technology stocks, took a more severe hit, falling by more than 3.5%. Rising economic concerns and political responses. This decline came as President Donald Trump sidestepped questions about whether the U.S. economy was on the brink of a recession or if consumers should prepare for rising prices due to his administration's tariff policies. Instead of directly addressing these concerns, Trump described the current economic situation as a period of transition, suggesting that while challenges exist, his policies will ultimately benefit the country. Despite Trump's reassurances, economic uncertainty remains high. Commerce Secretary Howard Lutnick insisted that the U.S. economy would not experience a contraction, though he did acknowledge that prices for some goods might increase as a result of tariffs. These remarks failed to ease investor concerns, as market participants continue to worry about the broader implications of escalating trade tensions. How tariffs impact the economy. At the heart of these concerns is the impact of tariffs, taxes imposed on imported goods. When these taxes take effect, businesses often pass the additional costs onto consumers, leading to higher prices on everyday goods. This, in turn, can reduce consumer spending, slow down business investments, and ultimately weaken economic growth. Rachel Winter, an investment manager at Killick & Company, emphasized the long-term consequences of the current trade policies. She stated, "The level of tariffs that Trump is imposing, I think no doubt, will have to cause inflation somewhere down the line." Economist Mohammed El-Arian echoed these sentiments, explaining that many investors had been optimistic about Trump's policies on deregulation and tax cuts. However, they underestimated the likelihood of a prolonged trade war. The recent market downturn reflects an adjustment in those expectations. It's a complete change in what the market expected, El-Arian noted. He also pointed out that businesses and consumers are becoming more cautious in their spending due to economic uncertainty. If this trend continues, it could further slow economic growth. Global market reactions. The effects of these economic concerns were not limited to the United States. European stock markets also recorded losses on Monday, with France's CAC and London's FTSE indices both closing approximately 0.9% lower. Germany's DAX suffered a more significant decline, ending the day down 1.75%. Susanna Streeter, head of money and markets at Hargreaves Lansdown, attributed these losses to investor unease about the potential consequences of Trump's tariffs. She explained that concerns over a possible U.S. recession were causing ripples in global financial markets. Technology stocks were particularly hard hit. Tesla shares plummeted by roughly 8%, while major tech giants Nvidia and Meta both experienced declines of more than 4%. These losses indicate that investors are reassessing the risks associated with businesses that rely heavily on international trade and supply chains. Trump acknowledges economic uncertainty but remains optimistic. In an interview with Fox News, which aired on Sunday but was recorded the previous Thursday, President Trump appeared to acknowledge concerns about a potential recession. When asked directly about the issue, he responded cautiously, saying, "I hate to predict things like that. There is a period of transition because what we're doing is very big. We're bringing wealth back to America. That's a big thing." He continued by emphasizing that economic shifts take time, stating, "It takes a little time, but I think it should be great for us." Despite this optimism, many analysts remain skeptical, warning that the full impact of the tariffs may not yet be fully realized. Retaliation and escalation in the trade war. The trade conflict is not one-sided. The U.S. is now facing retaliation from key trading partners, including China, Canada, and Mexico. On Monday, China imposed new tariffs on a range of American agricultural exports, targeting products such as chicken, beef, pork, wheat, and soybeans. These tariffs, ranging between 10% and 15%, are expected to hit U.S. farmers particularly hard, adding to the financial strain they have already been experiencing due to previous rounds of trade restrictions. Meanwhile, in Canada, Ontario Premier Doug Ford announced a 25% surcharge on energy exports to the U.S. in response to Trump's latest tariffs. Ford also issued a strong warning, stating that if the U.S. further escalates trade barriers, he will not hesitate to shut the electricity off completely. The back-and-forth nature of these tariff measures raises concerns about prolonged trade tensions, with no clear resolution in sight. Analysts fear that continued economic uncertainty could further erode business confidence and potentially push the global economy closer to a slowdown. Final thoughts. The ongoing trade war is reshaping the global economic landscape, with stock markets reacting strongly to each new development. While the Trump administration remains optimistic about its policies, many investors and economists remain cautious about the long-term effects of rising tariffs and global trade disruptions. What do you think about the current state of the U.S. economy? Are tariffs helping or hurting? Share your thoughts in the comments below. Thank you for watching News Lingo. Stay tuned for more in-depth coverage of the latest economic and financial news. Don't forget to like, share, and subscribe for regular updates.